Bitcoin, the world's leading cryptocurrency by market capitalization, is poised to become an integral part of global financial systems, according to experts like Fred Thiel, CEO of Marathon Digital Holdings. Thiel believes that as Bitcoin continues to evolve, it will not only influence corporate balance sheets, but also become a significant player in national strategies. The idea of Bitcoin becoming a sovereign reserve asset, a financial asset that countries will hold alongside traditional commodities like gold, is no longer just speculation. This narrative is gaining traction as public companies, institutional investors, and even nation-states take notice of Bitcoin's long-term potential to address economic challenges like inflation, debt, and currency debasement. Thiel, along with other prominent voices in the financial sector, foresees a future where Bitcoin could fundamentally reshape economic power structures. In a recent conversation with popular Bitcoin advocate Robert Breedlove, Thiel explained how Bitcoin's role is expanding, particularly in the United States, where the political landscape is becoming more favorable towards its adoption. One of the most compelling arguments for Bitcoin adoption is its potential to address the United States' mounting national debt. As of now, the US national debt exceeds $35 trillion, and traditional financial mechanisms are struggling to keep pace with its growth. Thiel presents a hypothetical scenario in which the United States holds 2 million Bitcoins. If Bitcoin were to reach a valuation of $20 million per coin over the next 10, 20, or 30 years, the United States would effectively be sitting on a reserve valued at around $40 trillion. This would surpass the current national debt, providing a new means for the country to manage or offset its obligations. Bitcoin's fixed supply and decentralized nature make it an attractive asset for this kind of strategy. Unlike fiat currencies, which governments can print at will, Bitcoin has a capped supply of 21 million coins, ensuring that its value is less susceptible to inflationary pressures. As inflation continues to erode the value of the US dollar, Bitcoin could offer a way to hedge against this devaluation. Thiel points out that there's no feasible way for the US government to service its debt at current inflation and interest rate levels. Thus, adopting Bitcoin as part of a broader economic strategy might be a viable solution to help stabilize the economy and preserve the country's financial power in the long term. If the United States were to make a strategic decision to accumulate Bitcoin, it would set a precedent that other countries would likely follow. Much like how the US currently holds the largest gold reserves in the world, holding a substantial amount of Bitcoin would allow the US to project power in the cryptocurrency market. This projection of power would not only come from the US holding a significant portion of Bitcoin's supply, but also from its ability to influence the market in ways similar to how it manages strategic assets, like the US Strategic Petroleum Reserve. When a country with the economic and geopolitical influence of the United States adopts a Bitcoin strategy, it forces other nations to reconsider their own stance on cryptocurrency. Countries that have historically resisted Bitcoin due to its decentralized nature or volatility would be compelled to enter the market to avoid being left behind. Just as nations once raced to accumulate gold to back their currencies, they might soon be racing to accumulate Bitcoin to safeguard their economies from potential global shifts in financial power. Thiel believes that once the US commits to this strategy, Bitcoin's price will skyrocket as nations and corporations scramble to secure their share of the limited supply. In recent years, major corporations have started to embrace Bitcoin as a key component of their financial strategy. Companies like Marathon Digital Holdings and MicroStrategy have taken the lead by accumulating large reserves of Bitcoin, viewing it as a long-term hedge against the devaluation of fiat currencies such as the US dollar. For public companies, holding Bitcoin is no longer a fringe idea, but a serious financial strategy aimed at preserving value and hedging against inflation. One of the main barriers preventing public companies from holding Bitcoin in the past was regulatory uncertainty and accounting rules. Companies were unable to mark Bitcoin at its market value on their balance sheets and were only allowed to impair its value. This created challenges in reporting financials, borrowing against Bitcoin, and presenting accurate financial health to shareholders. However, recent changes in accounting rules and regulatory clarity have removed many of these obstacles, making it easier for companies to incorporate Bitcoin into their financial strategies. Today, corporate treasurers are more willing to consider Bitcoin as a treasury asset, particularly as third-party custodians offer secure storage options. Thiel explains that even Bitcoin companies like Marathon prefer to use third-party custodians to mitigate the risks of self-custody. This trend is expected to grow as more companies see the benefits of holding Bitcoin on their balance sheets to protect against fiat currency devaluation and inflation. The rise of Bitcoin ETFs, exchange-traded funds, has opened the door for institutional investors to enter the cryptocurrency market in a big way. Institutional investors, including pension funds and hedge funds, represent trillions of dollars in potential investment capital. Bitcoin ETFs, which allow investors to gain exposure to Bitcoin without directly holding the asset, have made it easier for large institutions to include Bitcoin in their portfolios. Thiel highlights the fact that pension funds, which collectively manage over $40 trillion in assets, are now seriously considering allocating a portion of their portfolios to Bitcoin. Initially, experts believed a 1% allocation to Bitcoin would be considered bold, but advisors working with these funds are now suggesting that allocations could range from 2 to 4%. This is a significant shift, and when major financial institutions like Merrill Lynch and Morgan Stanley pass compliance for Bitcoin ETFs, it is expected to trigger a flood of institutional investment. The approval of Bitcoin ETFs by the US Securities and Exchange Commission, SEC, has already made waves in the market, despite some early challenges such as temporary outflows from certain funds. Nevertheless, industry leaders like BlackRock's iShares Bitcoin Trust, IBTC, and Fidelity's Bitcoin ETF, FBTC, are expected to drive significant amounts of capital into Bitcoin as more institutional investors gain access to these products. Thiel is confident that this influx of capital could push Bitcoin prices to unprecedented levels, possibly reaching $100,000 per coin in the near future. To understand Bitcoin's potential role in the global financial system, it's useful to compare it to gold, which has long served as a strategic asset for nations. The United States is currently the largest holder of gold reserves in the world, using it as a way to project financial power and maintain a position of influence in global markets. While the US dollar is no longer backed by gold, the country's gold reserves allow it to leverage this asset in times of economic uncertainty. Similarly, Bitcoin could serve as a strategic reserve for the US, much like the Strategic Petroleum Reserve allows the US to influence global oil prices. The SPR was created to protect the US economy from oil price shocks by holding a large reserve of crude oil. By strategically releasing oil from the SPR, the US government can lower gasoline prices and reduce inflationary pressures. Bitcoin could serve a similar purpose, allowing the US to influence the cryptocurrency market and project financial power in a decentralized world. As Thiel points out, holding Bitcoin would allow the US to maintain its economic dominance in a world where the significance of the US dollar as a reserve currency is diminishing. With the decline of the petrodollar system, in which oil-producing nations priced commodities in dollars in exchange for US protection, the dollar's role in global trade has been decreasing. Bitcoin could offer an alternative, helping the US maintain influence as other countries like China and Russia turn to Bitcoin as a neutral currency for international trade. The adoption of Bitcoin by the US would have profound global implications. Nations like Russia and China have already recognized Bitcoin's potential as a neutral currency, free from the control of any single government. This allows them to bypass sanctions and continue international trade without relying on the US dollar. As more countries adopt Bitcoin, it could become a standard currency for international trade, diminishing the US's ability to enforce economic sanctions through its control of the dollar. To counter this, the US would need to accumulate enough Bitcoin to maintain influence in the global cryptocurrency market. Without a significant Bitcoin reserve, the US risks losing its ability to project power and influence global financial markets. Thiel argues that adopting a Bitcoin strategy is not just a financial decision, but a matter of national security. Just as countries build reserves of oil and gold to ensure economic stability, they will need to build reserves of Bitcoin as the world transitions to a more decentralized financial system. This transition would challenge the current global financial order, where the US dollar serves as the dominant reserve currency. As Bitcoin becomes more widely adopted, it could usher in a new era of financial independence for countries that have long been subject to the dominance of the US dollar. However, This also presents an opportunity for the US to maintain its economic leadership by becoming one of the first major nations to adopt Bitcoin as a strategic reserve asset. Fred Thiel's vision for Bitcoin is both bold and transformative. He sees Bitcoin not just as a digital asset for individuals and corporations, but as a key component of national economic strategies. As the US faces growing national debt and inflationary pressures, Bitcoin could provide a way to stabilize the economy and maintain global influence. By adopting a Bitcoin strategy, the US would be able to project power in a decentralized financial world, countering the rise of other nations that are turning to Bitcoin to bypass the traditional global financial system. Thiel's argument is clear. The future of Bitcoin lies not just in individual adoption, but in its role as a sovereign reserve asset. As more public companies, institutional investors, and nations begin to see the potential of Bitcoin, its price and influence will continue to rise. The question is not whether Bitcoin will play a role in the global financial system, but how large that role will be and which nations will take the lead in its adoption.